All right, so let's dive into this stock market rally that seems like it just won't quit.
It's been quite a ride.
The S&P 500 up almost 28% just this year, 57 record closes.
Yeah, feels like we're in some uncharted territory.
Like defying gravity.
Right.
But everyone's wondering, is this too good to last?
Right.
I mean, are we about to go off a cliff, or can we just keep riding this wave?
Yeah, that's the big question.
That's what we're going to unpack today.
Absolutely.
Looking at both sides, the arguments for keep charging ahead, and also those warning signs that some experts are kind of flashing.
Yeah, you hit on a really key point there, which is momentum versus sustainability.
Right.
It's market psychology can create this incredible upward force.
Yeah.
When everybody believes the market's going to keep going up, they keep putting money in.
Yeah.
And that, in turn, fuels more growth.
Right.
But history also teaches us that even the strongest bull markets eventually face a reality check.
Okay, so help me understand this a little better. What's actually driving this incredible rally? I keep hearing about the strong U.S. economy. I keep hearing about anticipation of lower interest rates. And then, of course, the Trump tax cuts and deregulation promises.
Right.
Are those the main engines?
Those are definitely key factors.
Yeah.
A robust economy, generally means that companies are earning more money,
Right.
which makes their stock more attractive to investors.
Sure.
Lower interest rates make it cheaper for businesses to borrow and invest, so that further stimulates growth.
Oh, okay.
And the prospect of tax cuts and less regulation,
Right.
well, that can be like adding fuel to the fire,
Right.
at least in theory.
Right. Okay. But we also have to consider the historical context here, right?
Yeah.
You mentioned that even the strongest rallies don't last forever. And here's a stat that kind of blew my mind. The S&P 500 hasn't strayed 10% or more from its record highs in over 13 months.
Wow.
That just seems unusual.
It is unusual. Historically, corrections of that magnitude tend to happen about once a year.
Yeah.
So it really does beg the question, is this market just unusually resilient, or are we overdue for a pullback?
Right.
So one way to kind of gauge investor sentiment is by looking at what's called the SIBO Volatility Index, or VIX for short.
Okay.
You can think of it as like a barometer for fear in the market.
Okay, so if the VIX is low, that means people are feeling pretty chill, like, hey, everything's going to be all right.
Exactly.
Oh.
Right now, the VIX is hovering near a 5-month low, and a level below 14 historically often suggests a period of extended market calm.
Okay.
But this raises another interesting question.
Okay.
Could this calmness actually be a sign of complacency?
That's an interesting thought. I've also heard that a record percentage of consumers expect stocks to just keep going up. Is that a good sign, or could it be like a red flag?
It's a bit of a paradox. On the one hand, widespread optimism can fuel continued market growth. But on the other, when everybody is excessively bullish, it can create a bubble. And historically, some of the biggest market crashes have been preceded by periods of extreme optimism. Remember, what goes up must eventually come down.
Yeah, that's true. It's like we have this tug of war between bullish momentum and some underlying warning signs.
Right.
But December is historically a good month for stocks, right?
Right.
Wouldn't that add more fuel to this rally fire?
December does have a reputation for being a strong month for stocks. It's often referred to as the Santa Claus rally. The S&P 500 has historically averaged gains about 1.6% in December and finished higher about 74% of the time. However, we can't rely solely on historical trends to predict the future. We also need to consider current market conditions.
Right. And some of those conditions are making experts nervous, right? I've heard this term overbought conditions being thrown around.
Right.
What does that actually mean? Is that a sign that things are about to go south?
Overbought conditions essentially means that stock prices might have risen too far, too fast,
Okay.
and are now out of sync with the underlying company values. It's like a rubber band stretched too thin, and eventually something's got to give.
Right. So are there specific things that could trigger a reversal? A lot of folks are worried about Trump's trade policies and the potential for a trade war.
Right.
Could that be the pin that bursts the bubble?
Trade wars are definitely a concern. They can disrupt global trade, increase crises for consumers, and ultimately harm economic growth.
Right.
And this could create a domino effect, leading to decreased company profits, lower investor confidence, and ultimately a market correction.
Okay. So we've got this really complex interplay of forces here. We've got a strong economy, we've got potential policy impacts, we've got historical trends, and then we've got the ever-present risk of unexpected events.
Right.
It's like a giant puzzle, and we're trying to figure out if all the pieces fit.
Yeah.
But how do we even begin to make sense of it all? Where do we go from here?
That's the million-dollar question, isn't it?
Yeah.
And it's important to remember that even the most seasoned experts don't have a crystal ball.
Right.
There's no guaranteed formula for predicting market movements.
Yeah. So what can investors do? Should we just throw up our hands and say, whatever happens, happens?
Not at all.
Mm-hmm.
Well, we can't control the market. We can control how we react to it.
Yeah.
And that's where things get really interesting.
Okay, I'm intrigued. Let's unpack that in the next part of our deep dive.
So instead of feeling powerless, think of it this way. You have the power to become a more informed and strategic investor.
Okay.
And that starts with understanding the different layers of risk and opportunity that are out there in the market.
Okay, I like that. Taking control instead of letting the market control me.
Right.
So walk me through this a little. What are some of the key things that investors should be thinking about right now?
Well, we've talked about economic factors and we've talked about investor sentiment,
Mhm.
but there's another layer we need to consider, and that's what are called geopolitical risks.
Right.
The world is a pretty unpredictable place right now.
Yeah.
You've got rising tensions in certain regions. You've got unexpected political shifts. You've got natural disasters.
Yeah.
All of these things can send shockwaves through the market.
That's a great point. It's easy to get caught up in just the numbers and forget that there's this whole other dimension of global events that can really impact our investments.
Exactly. For example, let's say there's a sudden escalation of conflict in a region that's a major oil producer.
Okay.
Well, that could disrupt global energy markets. It could cause oil prices to spike, which would then impact a whole range of industries and stock prices.
Right, right. Okay, I'm starting to see the ripple effect here. But how can investors even begin to anticipate these kinds of events? I mean, it feels like trying to predict the weather like months in advance.
Yeah, you're right. There's no way to predict every geopolitical event that might happen.
Yeah.
But what you can do is stay informed about global trends and potential hotspots.
Okay.
Think of it as adding another layer of analysis to your investment decisions.
So it's not just about looking at a company's financial statements or listening to what analysts are saying. We also need to be aware of this broader, this global context in which that company operates.
Precisely. And this is where things get really interesting because investing becomes more than just about making money. It becomes about understanding the forces that shape our world.
Yeah, yeah. I love connecting the dots and seeing the bigger picture.
Right.
But let's zoom back in for a minute and talk about specific sectors. We know the overall market is up, but are there certain sectors that are particularly hot right now?
Absolutely. It's important to remember that not all sectors perform equally during a bull market. Some are more sensitive to economic conditions or investor sentiment than others.
Right.
For example, technology has been a major driver of this rally. You've got companies in e-commerce, cloud computing, artificial intelligence, all
Yeah.
seeing their valuations just soar.
Yeah, well, that makes sense. It feels like technology is changing everything these days. Are there other sectors that are seeing similar growth?
Healthcare has also been a strong performer, driven by factors like aging populations and advances in medical technology.
Yeah.
And then there's the energy sector,
Yeah.
which has benefited from rising oil prices.
But isn't the world shifting toward renewable energy? I mean,
Oh,
would
yeah.
that impact the long-term prospects of the energy sector?
That's a great question. And it highlights the importance of considering these long-term trends when you're making investment decisions.
Yeah.
While oil and gas companies might be doing well now, investors are also looking at the growth potential of companies involved in renewable energy, electric vehicles, sustainable technologies.
So it's not just about which sectors are doing well right now.
Right.
It's about anticipating which sectors will be the leaders of tomorrow. It's like we're looking at the market through both a telescope and a microscope,
Right.
the big picture and the fine details.
You've got it. And don't forget the historical context.
Yeah.
Looking back at previous bull markets can provide some valuable insights.
Speaking of history, I'm curious. Haven't all bull markets eventually come to an end? I mean, is this one any different?
Well, that's one of the most important lessons from history. Bull markets, no matter how powerful, don't last forever.
Right.
Eventually, there's a correction,
Yeah.
a period where the market pulls back, sometimes quite sharply.
Yeah.
And sometimes those corrections turn into bear markets, which are
Mm.
extended periods of decline.
So the question isn't if a correction will happen. It's when it will happen. And that can be a pretty scary thought for a lot of people, right?
It's understandable to feel apprehensive about market downturns, but remember, fear can be a powerful motivator.
Right.
It can encourage us to be more cautious.
Mhm.
It can encourage us to do our research and to have a plan in place.
So let's talk about that plan. What are some strategies investors can use to kind of navigate this uncertain terrain? What are the smart moves to make right now?
Well, one of the most fundamental strategies is diversification.
Okay.
Don't put all your eggs in one basket. Spread your investments across different asset classes like stocks, bonds, and real estate, as well as different sectors and geographic regions.
It's like that old saying, don't bet the farm on one horse.
Yeah.
Makes sense. What other strategies are out there?
Another important strategy is to stay informed. Keep up with market news and
Mm.
trends, but but don't get caught up in the day-to-day noise. It's easy to get swept up in the hype, especially with social media and 247 news cycles.
Yeah, it definitely can feel like information overload sometimes.
Yeah.
How do we filter out all that noise and just focus on what's really important?
Focus on understanding the underlying fundamentals of the market and the companies that you're investing in.
Okay.
Look at long-term trends, not just the short-term fluctuations.
Right.
And remember, even the experts don't have a crystal ball.
Right. So it's about having a plan.
Right.
Staying informed, but also just being realistic about what we can and can't control.
Right.
Anything else investors should keep in mind?
Absolutely. Having a clear exit strategy is crucial. It's not enough to just buy investments. You also need to know when to sell them.
Yeah.
Determine your profit targets and your stop loss levels in advance. That way, you're not making emotional decisions in the heat of the moment.
That's smart. It's like having a game plan for both winning and losing.
Right.
We've covered a lot of ground here. Diversification, staying informed, exit strategies. It's starting to feel like investing is a bit of a chess game, isn't it?
Yeah.
Like thinking several moves ahead, anticipating your opponent's actions.
That's a great analogy.
Yeah.
Investing is definitely a game of strategy.
Yeah.
And the more you understand the rules and the players, the better your chances of success.
But even the best chess players sometimes lose, right? There are no guarantees in this game.
That's true. There's always an element of risk. And even the most skilled investors can make mistakes.
Right.
But that's where risk management comes in.
Okay.
It's about identifying and mitigating the potential risks to your investments.
So it's not about eliminating risk altogether. It's about understanding it and managing it.
Yeah.
Okay, that makes sense. But how do we balance that need for strategy and control with this acceptance that we can't predict everything the market might do?
It's a delicate balance for sure.
Yeah.
Successful investing requires a blend of knowledge, strategy, and a healthy dose of caution.
So it's not about getting rich quick.
Right.
It's about building a solid financial foundation for the long term.
Exactly. And remember, the market is always evolving. New challenges and opportunities will arise, and it's up to you to stay informed and to adapt your strategies accordingly.
This has been incredibly helpful. We've talked about the forces driving this market rally, the potential risks on the horizon, and some strategies for navigating this complex landscape. But before we wrap things up, is there anything else that you want to leave our listeners with?
I think the most important takeaway is this. Investing is a journey. It's not a destination.
Right.
It's a continuous process of learning, adapting, and making decisions that align with your goals and values.
I like that, a journey. And every journey has its ups and downs, right?
Absolutely.
Yeah.
And remember, even the most experienced investors make mistakes.
Right.
The key is to learn from those mistakes and to keep moving forward.
So keep learning, stay curious, and don't be afraid to ask questions. I think those are great guiding principles for anyone who wants to navigate this market successfully.
Couldn't agree more.
Mhm.
Curiosity is the fuel that drives knowledge and growth.
On that note, let's move on to the final part of our deep dive. I'm eager to hear what other insights you have to share. Okay, so we've talked a lot about, the potential risks in this market rally, but it it can't all be doom and gloom, right?
Right.
There's got to be some potential upsides we haven't talked about. What happens if this rally just keeps chugging along?
Yeah, that's a great question. And yes, a continued strong market can have some very positive ripple effects.
Okay.
Think about it. When when the stock market is doing well, people feel more confident about their financial future.
Yeah.
They're more likely to spend money. They're more likely to invest in their businesses, even make major purchases like homes or cars.
So a strong market could actually boost the overall economy.
Exactly. Increased consumer spending can lead to higher corporate profits,
Yeah.
which can then lead to more hiring, wage growth, and even more investment. It's a virtuous cycle.
Right. And a strong economy can lead to all sorts of positive things. Advancements in technology, healthcare, even infrastructure. It's like a rising tide that lifts all boats.
That's a great way to put it. It's important to recognize that market dynamics are complex,
Mm.
and there are always two sides to the coin, both risks and opportunities.
So with all these factors swirling around, how do we as individual investors make sense of it all and make decisions that are right for us? I mean, where do we even begin?
Well, it starts with understanding yourself,
Okay.
your financial goals, your risk tolerance, and your investment timeline. Are you saving for retirement decades down the road,
Right.
or are you hoping to buy a house in the next few years?
Right.
Those are very different scenarios that require different investment strategies.
It's like choosing your own adventure in the market, picking
Right.
the path that aligns with your personal destination. But there's so many options out there, so many different ways to invest. How do we even know where to start?
Well, one of the most important things you can do is to define your investment philosophy.
Okay.
Are you a buy and hold investor who's comfortable riding out market fluctuations over the long term? Or are you more active, looking to buy low and sell high? There's no right or wrong answer. It's about finding an approach that you're comfortable with and that fits your personality,
So it's not just about following the herd or chasing the latest hot stock tip.
right?
It's about having a plan. It's about knowing your goals and making decisions that are right for you.
Couldn't have said it better myself. Ultimately, investing is a personal journey, and the most successful investors are those who understand themselves, their risk tolerance, and their long-term objectives.
Well, I think that's a great place to wrap up our deep dive. We've covered a lot of ground today. We talked about those economic forces driving this market rally, the potential risks and opportunities out there, and even some strategies for navigating this really complex landscape.
It's been a pleasure exploring these topics with you. I always find it fascinating to kind of delve into the intricacies of the market and to share insights that can help investors make more informed decisions.
And remember, folks, even the experts don't have all the answers. The market is inherently unpredictable, and there will always be factors we can't foresee. But by staying informed, doing your research, and making decisions that align with your goals, you can increase your chances of success.
Absolutely. And never underestimate the power of curiosity and a willingness to learn. The more you engage with the world of finance, the more empowered you'll become to make sound financial decisions.
So keep exploring, keep asking questions, and keep learning. The journey of investing is best traveled with knowledge, strategy, and a healthy dose of curiosity.
Well said. Until next time, happy investing.
And may your portfolios be ever in your favor.